Hello, and welcome to Wisdom to Wealth with Whitney Hammond and Theresa Pellizzari. Good morning, Theresa.
Good morning. Hello, everyone.
I'm the owner of Sovereign Wealth Management, and Theresa is a financial security advisor at Sovereign Wealth Management. And we bring you these sessions today to help you take control of your money and your finances, so your finances are not taking control of you. So whether you are new to financial planning or whether you have been doing financial planning and owning a business for many years, we talk about things at all levels. And our questions come from our followers. And today we are going to actually talk about life insurance. So because people are asking, why should I have life insurance? They feel that they have a pretty common one of idea that insurance is to cover debt. And yes, it is, but there's some other reasons too. So first of all, Theresa, let's have you talk about mortgage insurance.
Okay, thanks, Whitney. As you mentioned, I have a lot of clients that specifically ask about mortgage insurance versus term insurance and what is the difference, what is the benefits. So, if you think back, you go buy your first house as a young couple, you go into the bank, you fill out all these papers, you finally get approved, you sign off, and then they say to you, would you like mortgage insurance? And you go, wow, geez, I just spent $500,000. How much is the insurance? And they give you a quote, roughly, let's just use $100 for a round number. From there, you leave, you answer 5 questions that are very top level questions about your health. From there, you sign off, okay? So if we talk about the 3 most important things about mortgage insurance versus term insurance, that's exactly where it starts. The bank will ask you 5 questions. That is not complete underwriting. We ask you anywhere from 30 to 55 questions so that we can know upfront exactly what your age, your health situation is, and we can put a contract in place that will be live for the next 85 years or until age 85.
Right, so the banks do the underwriting at the time of death. And the
Correct.
insurance companies do the underwriting at the time of application. So as long as you have told the truth on your life insurance application, your death claim will actually be paid, versus with debt coverage, they will do the underwriting at the time of claim. So you do not have a licensed advisor asking you those 3 questions. Have you ever had? Do you have? There needs to be a full disclosure about your health.
Right. And to that point, Whitney, it's important because who wants to go through that underwriting when you're stressed and grieving and just lost someone and worried about money? So that's a key piece. The next is the beneficiary of mortgage insurance is the bank. So the bank gets paid the money, you no longer have a mortgage. With term insurance, the beneficiary, the named beneficiary gets the money, and you decide whether you want to pay down your mortgage, whether you want to go on a vacation, whether you want to pay down other debt, take time off work, whatever the case may be. So that decision is yours. And the next point is that if you, let's just say your mortgage insurance starts at $500,000 because that's the balance of your mortgage, with the bank, as you're paying down that mortgage, your coverage is also going down, yet you're still paying the premium that you started with. So I'm just going to show you a quick graph, and then Whitney, you can jump in if there's any points that I'm missing. Can everyone see my lovely graph?
I can see it.
So we start at the top. You got a $500,000 mortgage, whether you're with the bank or whether you're getting term insurance. Let's just say the bank, you're paying $102 a month for the premium. I can guarantee you, I have never saw term insurance be the same price. It's always lower and significantly. So in my example, it's $60 a month. for the same $500,000 in coverage.
Okay,
Every
so
mortgage-
at the bank, let me just jump in here. Hold your
Sure.
card up. Put your card up. Okay, so at the bank, they would charge you, in this example, $102 per month for your 500,000 coverage on your mortgage. Whereas if you went directly to a broker who would fetch you the life insurance from the life insurance company, the premium would be $60 versus 102. And this is what I've seen in my 25-year career, that the insurance company price is lower than the bank does. And that because we underwrite everybody individually, and in the bank they have everybody in there, whether they smoke or don't smoke or have, you know, whatever is going on with their health, because they don't have a way of selecting.
Absolutely, and they're not licensed to be doing insurance, so it becomes third party. And we all know if things are third party, there's an extra fee that gets charged with that. So just to wrap this up, let's assume in this scenario that your mortgage is now $400,000 and one of the people on the mortgage passes away. With the bank, first, the underwriting needs to happen. Not a lot of fun while you're grieving and stressed about finance. Second, if the mortgage is then balance is $400,000, that's what will get paid, and that money will get paid to the bank. So you will no longer have a mortgage, but the beneficiary is actually the bank. In a case with term insurance that Whitney and I are talking about, we just need to process the claim because the underwriting has already been done. And then the term insurance gets paid directly to the beneficiary at the same amount it was quoted for back when we started the contract. So you can see that the value is significantly better working with an individual advisor. And then from there, you get to decide how you want to spend that money. You could put a chunk towards your mortgage. You could take a vacation. You could take a year off work. It's totally up to you. We don't tell you how to spend your money.
The other thing that I really like about the life insurance, term insurance through the insurance company, is that it's portable. So if you sell your house, you don't have to reapply every time you sell your house, or not even sell your house, just refinance, because that's been a big thing over the last 10 years, is that people are refinancing their homes, consolidating debt, or they're renovating. And this is another thing. When you're renovating your house, I'm finding a lot of people in their 50s, and they paid their house off quite a while ago, me included. And then all of a sudden you want to change your kitchen or update your bathrooms or whatever, and you start out with this project that's going to cost you $100,000, and then of course it doesn't. It costs you 4 times that, but it's awesome, and you have, like, you know, a really nice, well-built house. So when you buy that insurance as you're older to cover the debt that you just created to do that renovation, the premium for sure is much, much lower at the insurance company. But also you have a convertible product. So once you pay off that debt and you want to keep that insurance because you've been paying for so long, as you get older, most of our sales are people over age 65. So you can actually convert that insurance into a universal life permanent product or a permanent whole life product. So either way, when it comes to buying insurance, it's really important to sit down with an advisor and talk to them to make sure that you get the right coverage, the right premium, the right insurance company, and the right advisor who will be there. Not to be morbid, but in my career, I honestly cannot estimate how many claims I've done. I've done that many. Every year I've lost a number of clients during COVID. And also I would say the highest amount of clients I lost in 1 week was 7 people. So this stuff is real, folks. It's real. When we take these applications, we don't know whether we're going to be doing your claim. So we make sure that we get your questions right, that we put your paperwork together, and we stay with you for life. So you stay with the advisor who you purchased the insurance from, unless you fire us, but you stay with us for life. and it's a pretty good relationship. So let's leave this talk today just on the term at the insurance company versus the bank term insurance. We'll talk to you in 2 more days. Thank you, Theresa, for being with us today. And any questions, please, people, continue to send them in, private message, email, just like you've been doing, and we will address all of your questions. Take care.
Great. Bye, everyone.